Wall Street erasing all of September's gains. The S&P 500, or the Dow rather, was down more than 500 points earlier this Wednesday. For more on now where the markets are headed, we turn to Wayne Kaufman. He's Chief Market Analyst at Phoenix Financial Services. Welcome back, Wayne. So in today's case, growth concerns, is that the trigger?
That is. You know, we saw that yesterday. It's you don't frequently get a particular piece of news or indicator that you can definitely say caused the market to move one way or another. But yesterday when we got the ISM numbers, the market had been up a lot, and it was just a complete 180 as soon as that number came out. And then we finished the day with better than 1% losses, and then that's followed through today. And so the market's in a sell-off here, and I think it's getting near the end of this.
What makes you think it's near the end of the sell-off?
Because the indicators that I use, I use three categories of indicators: market breadth, sentiment, and valuation. So valuations right now, stocks are very attractive, especially versus bond yields. Okay, with a 1.6% 10-year note yield, and you've got a forward PE yield of about 5.7%. That's a huge difference, the 5.7 to the 1.6. And then even the S&P 500 dividend yield is now about 1.95%. So that's well above the 1.6 10-year note yield. And it's actually, that spread now has widened to the level it was back in early August when the market bottomed there. In addition, the percentage of stocks over some short-term moving averages, over the 10-day, their own 10-day moving averages, when I left my office a little while ago, it was about 7%. Whenever that number is in single digits, it can go lower, but that's an extremely oversold level. So I think we're very close to bottoming on this leg down.
Even though today the Dow and the S&P 500 fell below their 100-day moving averages, which some technical analysts say portends stocks could go lower, but you don't see it that way.
Well, certainly they could, but more importantly, in terms of support, we've got the low 2800s that we reached in August. That was very important support. And then you've got the 200-day moving average down there around 28, in the 2830s. So I think those are more important than the 100-day.
Go ahead.
The problem is now we've got some difficult resistance on the upside at the 2938 area to 2945, where the 50-day moving average is, and there's a gap there where we gap down. So that's going to be difficult resistance. Should we bounce back up through there quickly, though, that'll be a very strong positive indicator.
So if you're correct and we are near the lows, what should investors be picking up at this point?
I think consumer continues to be good. Consumer discretionary, consumer staples are good. And I think select technology stocks. I think some of the healthcare stocks have just gotten trashed. There's a handful of stocks that for example, cancer detection stocks that were north of 100 that now are down in the 60s, and nothing has really changed in their numbers or their prospects. So I think there's a lot of stocks that have been, the baby's been thrown out with the bathwater.
Okay, so with S&P 500 down nearly 2% today, you say perhaps it's time to consider going bottom fishing. Thanks a lot, Wayne, for your thoughts. Our thanks to Wayne Kaufman, Chief Market Analyst at Phoenix Financial Services. I'm Fred Katayama, and this is Reuters.